What's going on? Welcome to the Credit Plug channel. So for today's live, we have a very exciting topic. Now, I'm going to be sharing with you how you can go about never having to apply for an auto loan ever again. We're going to go over how you could actually hide your utilization, specifically your auto loan debt. And we're going to be going over a play where you could actually manufacture credit data. That's right. And so I've done several reviews on Carputty, and I don't think you guys understand how much of a game changer this platform is. So for those who don't know, Carputty is basically, instead of you having to keep applying every time you want to finance a vehicle, what you do is you have what's called a flex line, right? And so let me just refresh this just so you guys know. Now, originally, as you can see right here, I applied for this over a year ago, back in 2023, but I did not, in fact, use the flex line because I had just recently bought my XM. And I had originally financed that through BMW Financial Services and have since paid it off. But when I went back into Carputty, so if you don't activate your line, or let's say you get a pre-approval and you don't actually use it, then you have to go through the cycle again. And I'm not sure if it's 60 days or 90 days, but basically if you got a pre-approval and you don't actually move forward with it, you basically have to redo your application. Now, I'm going to walk through all the different data points, how to get approved, and just some little hacks. And so I was actually able to get, as you can see, a $250,000 line of credit, which is the maximum on the personal side. Now, they also have a business line, which goes up to even higher amounts. But pretty much the way this product works, you have a line of credit instead of just separate individual loans. So let's say, you buy a vehicle this year and then maybe 2 years down the road, you want to buy another one. Traditionally, you would have to do like another credit application. Maybe your credit has changed since then. So there's a lot of different factors to go in when you're applying for auto loans based on your data points and your financial position when you're applying. So with Carputty, you pretty much get this dedicated auto line of credit, and you can add vehicles to that line of credit, right? So the cool thing about Carputty is that you don't have to keep applying for auto loans every time you want to finance a new vehicle. So I think that's a very unique approach to this. And I feel like, there are probably similar products, but it's definitely revolutionizing the way that people are financing their autos. So just to go over some of the different details about the Carputty line of credit. Actually, let's go here. So the features include limits up to $250K on the personal side. So that's the max you can get. They also have business lines of credit. So if you want to get business vehicle loans, you can get up to $800,000. And this could be if you have, let's say, a Turo fleet, or if you're just looking to, add vehicles under your business. And so, again, this is a game changer. Now, essentially, they give you a 2-year time window to add cars to your line. So let's say you got approved today, you would have 2 years to add a vehicle to your Carputty line of credit before it expires. So they basically give you this grace period. Maybe if you're not ready to purchase a car right now, once you do get approved, you have up to 2 years to basically add a car. Now, their terms. So what happens is you have, and I don't know why this, so basically you have a repayment term of 63 months. So that's basically how all of their loans work. So you have this line of credit, but then each individual vehicle that you add to the line has a 63-month term. So 63 months is just a little over 5 years, right? 5 years and 3 months. So that's basically the term for that particular auto loan, right? Now, because Carputty uses a variable line of credit, the rate in which you lock the vehicle in can change from time to time, but the rates are locked at the time of purchase. So right now, let's say, for my line, I have a 7% APR. So if I were to add a vehicle to that line right now, it would be locked at 7% for the duration of that 63 month term, right, for that vehicle. But let's say rates get lower, which we're anticipating. So let's say the rate drops down to 6.5, 3 months from now, right? So then if I purchase a vehicle at that moment in time, the rate is going to be locked at 6.5. So the variable rate is just is going to be based off of the SOFR, which I'll go into, plus a margin. So basically, just one way to think about it is that it's going to be locked at that moment in time. Now, I want to give you guys some perspective on how they actually determine the rates, right? So they have what's called the base rate. So this is the SOFR. So they use the secured overnight financing rate plus a margin of 1.66%. So this is pretty much what Carputty is adding onto the base rate. So just to give you guys just more insight into sort of how this works. So pretty much, there's a couple different rates that lenders use to sort of baseline a lot of these different, credit products like loans, lines of credit. So a lot of y'all are probably familiar with the bank lending rate, otherwise known as the prime rate, or the Wall Street Journal prime rate, which is like 8.5. So for those who have lines of credit, I'll give you an example. Like at M&T Bank, I have a line of credit where it's the prime rate or the bank lending rate plus 2%. So what they basically do is they add 2% to this, the prime rate or the bank lending rate plus 2. So my line of credit is 10.5%. Now, this is also variable. So these fluctuate. Now, going back to Carputty, they're using the SOFR. So this is the secured overnight financing rate. And as you can see right now, it's at 5.34% as of August. And so as you can see here, 5.34%. And you could actually go online to see historically what the secure overnight financing rate, otherwise known as the SOFR, right? And this table just gives you by the date, what that SOFR is. And as you can see, as of the 14th, it actually dropped down to 5.33. And again, this is always fluctuating. But yeah, this basically just gives you a historical snapshot. And that's pretty much how they're pricing, the Carputty line of credit. Now, another thing I just wanted to point out to you as well, when it comes to just interest rates, right? So again, prime rate, and you also have the Fed interest rate, right? So when you hear this talk about, the Fed is lowering interest rates, increasing interest rates, they're talking about the Fed interest rate. So the relationship between the Fed interest rate and the bank lending rate or the prime rate is usually going to be the prime rate is usually going to be the Fed interest rate plus 3. So you see right here, 5.5% for the Fed interest rate. And so the prime lending rate or a bank lending rate is going to be plus 3, right? So 5.5 plus 3 equals 8.5. So when interest rates are lower, what's being lowered actually is the Fed interest rate. And because these other rates are tied to that, like the prime rate, if the Fed rate, let's say, goes down to 4.5, then the prime rate is going to go down to 7.5. So they kind of work in lockstep with each other. And not to get too far off topic, I just want to give you a little bit of insight into just kind of how this has worked over the past couple of years. So you remember back in 2020, the interest rates were basically almost at zero, right? At 0.25. And for some of you remember back then, when we're going over lines of credit approval, stuff like that, a lot of those lines were very low, right? But as we could see, beginning in the first quarter of 2022, the Fed started to hike interest rates. And you could see, it kind of looks like a step, right? Because they're hiking it up, 25 basis points, 50 basis points, 75 basis points. So all of these coincide when the Fed actually increase the Fed funds interest rate, right? And so it's pretty much been fixed at 5.5% since almost about a year, right? It's held steady. So this has been sort of that period where we've seen higher interest rates. And when looking at some of the other interest rates as well, such as like the prime rate, you could see that it kind of follows exactly in the same order. So just looking at this, again, this is when interest rates were really low, the prime rate. And the prime rate, I would say, is going to be more relevant when it comes to financing products like business lines of credit and loans and things like that, because usually the whatever interest rate you're paying, the banks are usually going to use the prime rate plus a margin. And you could see back then, let's say if the margin was 2% or 3%, you might get a line of credit at like 6.25%. But again, the prime rate has been at 8.5. So a lot of times when you see these lines of credit, usually the prime lending rate is used, I would say mostly with unsecured. But at the same time, a lot of institutions can also use the SOFR. I know, for example, in the capital markets and warehouse lending, balance sheet lending, a lot of these fintechs, they're getting their warehouse facilities priced using the SOFR, right? The secured overnight financing rate. So I just wanted to sort of give you guys some context into just how that works, right? But just going back. So again, your rate is locked at the time of purchase. So the line of credit is variable, but depending on when you actually lock your rate and add that vehicle, it could vary. And one of the opportunities, which I'll go into later, is that right now rates are still, I would say, at their peak. From a lot of the feedback that I've gotten from a lot of bankers and, different institutions, is that rates are anticipated to be cut either this year or early next year, right? So I think from an opportunity standpoint, rates are only going to get lower from here. I don't think they're going to increase anymore. But again, I don't have a crystal ball. So some of the benefits when it comes to Carputty, as I mentioned, you do not have to reapply for auto loans every time you're financing a car. Now, here's one of the biggest game changers. And depending on how you look at this, right? As of right now, Carputty does not report to the Consumer Credit Reporting Agency. So yes, they will do a hard inquiry, but that account currently is not showing on credit reports. And typically when you have, let's say, newer fintechs, they have to have a certain amount of accounts to report to the credit reporting agencies before they're able to submit files. And so with a lot of fintechs, from my experience, sometimes it would take them a couple years before they have enough data to start reporting. So as of now, Carputty is a hidden trade line. And one of the benefits of this is that you can hide your auto loan debt. So basically, let's say you get a $50,000 vehicle and you finance it with Carputty. So let's say you apply for a credit card or a personal line of credit or a personal loan. Those lenders are not going to be able to see this debt, this auto debt, because again, it's not reporting as of now. Now, that doesn't mean in the future that they won't report, but as of now, it's not reporting. So the benefit right now is that you can hide your auto loan debt from your personal credit report. And what this will do is lower your debt to income, right? Because a lot of lenders, they look at your DTI. So for those who don't know what debt to income is, debt to income is a ratio that looks at your monthly debt obligations in comparison to your monthly income, right? So the lower the DTI is, the higher chances you are of getting approved, because it basically is demonstrating that you have, less of a debt load, right? Now, again, this is just what's reporting. Now, your actual DTI doesn't really change, but what is actually shown on your credit reports is kind of giving you to a certain degree, an artificially lower debt to income, right? And so if lenders can't see that debt, then that's going to make you appear more credit worthy, right? Now, the other advantage, like I said, and it depends on how you're looking at it. Now, if you're someone who already has established credit, already has a lot of accounts, then the benefit might be more from the hidden trade line. But the other advantage, let's say once it actually does start reporting, as I just showed you guys, I have a $250,000 line of credit with Carputty. So once that does start reporting, it's going to be a high limit primary trade line reporting on the credit report. So this is going to give you a high limit comparable. This is a game changer because there's very few accounts where you're getting limits this high, at least on the personal side, especially a revolving account. So again, there's a lot of advantages with this. Again, depending on how you're looking at it. Now, let's say you don't have as an established credit profile, but you're able to get approved for a higher limit Carputty line of credit, whether that's a $50,000, $100,000, $250,000. That's just a game changer to have on your primary. And the last advantage I'm going to be discussing is how you could actually manufacture credit, specifically auto trade lines. And we're going to break down exactly how you can do this leveraging the Carputty line of credit. Now, in terms of underwriting, I'm going to explain to you what you need in order to get approved for this. So the way the process works, when you apply for a line of credit with Carputty, they give you the option. You could either apply for a personal line or a business line. Now, I'm going to assume most people watching this, the personal line is going to be more relevant. So either way, they're going to do an Experian soft pull for pre-qualification. Now, the thing that I like about Carputty is that what you get is what you see is what you get. So if you get pre-approved for whatever amount, that's the exact amount that you're going to get approved for. Once you accept the offer, they're going to do a hard pull. So again, soft pull to get an offer, hard pull once you accept. Now, another thing that they're going to do, you do have to link through Plaid. So they use a combination of your personal credit as well as your banking activity. So for those who don't know what Plaid is a fintech service provider that allows lenders to have read access to your banking data. So what happens is you connect through Plaid, they pull your data in, they analyze that data to determine, okay, do you have enough cash flow? Do you have enough income going into your bank account to support a given limit for the line of credit, right? So it's not just purely based on your credit. You also have to have some type of, verifiable proof of income. And I'm actually going to walk through on the later slide, one of the techniques that I use to have verifiable proof of income. Now, in terms of what specific FICO scoring model that they're using, they're going to be using the Experian FICO 2. So for those who know about the different versions of FICO, the FICO 2 is actually the mortgage version of the FICO, right? So you have FICO 8, which is probably the more commonly used one. You have FICO 9, you have FICO 10, FICO 10T. You actually have FICO auto scores and bank card scores, but interestingly, they actually use the mortgage score. So you might think because this is an auto related type of credit product that they're going to look at your auto FICO scores, right? But they're actually looking at the mortgage one. So usually when you have some type of installment loans or debt, a lot of times lenders will use the mortgage scores because the mortgage scores put a heavier emphasis on installment accounts versus revolving accounts. Now, even though Carputty is a auto line of credit, when you actually add cars to the line of credit, it becomes like a separate installment loan, right? The reason why it's revolving is because when you make repayments to those specific installment loans from your line of credit, that adds additional credit to your available balance, right? So when you're making repayments on your auto loans through Carputty, whatever part of the principal is actually going to increase your amount of available credit. But the loans themselves are going to be, fixed monthly payments, right? Now, if you have multiple cars on your Carputty line of credit, you could be making a different payment amount per vehicle that you have on that line of credit, right? So they're actually putting a greater emphasis on your installment history, right? So whether you have previous mortgages, not to say you need it, but any type of fixed repayment, that's going to be a heavier emphasis versus like how you manage your credit cards. And so that's actually not surprising when you look at it, because traditionally, auto loans are going to be just fixed monthly payments. So they want to see, okay, how have you managed accounts where you had to make a fixed monthly payment over a specified, time frame. The other part of the underwriting, you will have to upload a valid driver's license. So that's very important. And in addition, what happens is they'll send you a link where it'll go to your cell phone. And what they're doing is they're asking you to do a selfie. So you've probably seen some of these where they do like a biometric scan. So they're scanning your face, and then I guess they're comparing it to the picture on your driver's license. And so that's a really important step to pass verification, because if you're unable to do that, then you can't move on to the next step. Now, here's some differences with the business line. So the business line actually is going to do a soft pull of it actually does a hard pull of your Experian business report. So what they're looking for is to, one, verify that the business entity actually does exist and it's in good standing. Another thing to keep in mind is that you can get denied if there are UCC filings on your business. So that's another key data point just to keep in mind if you are looking to take advantage of Carputty on the business side, is that they will check for UCCs. And from the data points I've gathered, if your business does have UCCs, it seems like they're auto declining, business apps that have UCCs present. So just one thing to keep in mind. Now, here's where the opportunity lies, right? So as a lot of you know, right now, used car prices have gone down. Like the car market has tanked. I would say it probably hit a high back in like 21. But since then, a lot of vehicle prices have gone down. Vehicle values have plummeted for a couple different reasons. One, we have higher interest rates, defaults have increased, and then car affordability has just become a lot less affordable for the average American, right? And so auto dealers are actually taking a lot of hits because not only are they not able to sell a lot of new vehicles, you also have a lot of people returning or not buying out their leases, right? So, people who've gotten cars back in 21, 22, let's say if it was a 24-month or 36-month lease, those leases are coming due. So the inventory is exploding, defaults are rising, and then it's harder to get qualified from the bank. So this is an opportunity, because if you've been on the sideline waiting to get a used car, or even maybe a new car right now, and you can actually get a deal, because a lot of dealerships are hurting right now. So this is actually a better time to buy a vehicle versus, when I bought vehicles in 21 as well as in 23. Right now, you can actually get a pretty good deal. And so because interest rates are actually about to get cut, if you get approved for a Carputty line of credit, what you can do is you can wait until the next rate cut. So once the next rate cut happens, let's assume you get the best rate. I think right now, like 7%. I think I qualify for the lowest rate, or one of the lowest rates. Just giving myself an example, 7%. Let's say the rates get cut I don't know, half a percentage point. So now we're looking at 6.5. So you can lock in a lower rate. And, right now, and again, you can get a good deal on a vehicle. So that's where the opportunity lies when it comes to the current market, when it comes to auto vehicles. Now, here is another game changer I wanted to talk about. And this is a way that you can manufacture auto trade lines. All right. So I'm going to walk you through this process. So the first step, get approved for a Carputty line of credit, right? So once you get approved for the Carputty line of credit, what you want to do is not even add a car to your Carputty line of credit. And this is if you want to manufacture auto trade lines on your credit report. Go to a credit union and get an auto loan. Purchase a vehicle using the credit union. And then what you want to do is probably do, maybe like the shortest term. Don't do like a 96 month or 84 month or 72 month. Do like a 48 month or 36 month, because what you want to do is make your first 3 payments. And because if you have a shorter term, you're going to be making a larger payments, because ultimately, vehicles are going to depreciate, right? That's just a given. So ideally what you want to do is make 3 decent sized payments. So the shorter the term, you're going to pay down a higher portion of principal than you would if you had a longer term. So what you would do, let's say if you do a 48-month term, make the first 3 payments and then refinance on your Carputty line of credit. And the reason why I say, do a shorter term and do at least 3 payments is because you don't want to be upside down trying to refinance, right? You want to at least, I would say, if you can, pay down at least 5% of whatever the vehicle that you finance, right? Pay down at least 5% within those first 3 payments, right? Then you finance to your Carputty line of credit. Now, what happens is Carputty is going to pay off your credit union loan for that auto vehicle. So now you have a paid off trade line on your credit report, right? And then because Carputty is not reporting since you've transferred now that vehicle debt to the Carputty line of credit, it's no longer visible on your credit report. So now you have a paid off auto trade line. You still have your vehicle and it's not reporting on your credit because, again, Carputty, as of right now, is not reporting to the major credit reporting agencies. So what you've effectively done is gotten a paid off auto trade line on your credit report, which is going to help with your overall credit profile because it shows as a paid off auto loan. So now you're going to have even more comparables, and that auto debt is now hidden because it's now refinanced using the Carputty line of credit, right? So your debt to income is actually going to be lowered since the auto debt does not report. So again, this is a way of manufacturing credit data. This is a game changer. Now, I don't know how long this is actually going to last until they actually start reporting, but as of right now, Carputty is not reporting to the major credit reporting agencies. So this is a way for you to hide your auto loan debt, as well as if you want to. I'm not giving financial advice, but this is something that you could check out. Manufacture auto trade lines. And I would say this is extremely important because what I've seen a lot recently is that people, for example, let's say if you have a Turo business, a lot of people have been going to these credit unions and getting all of these auto loans under their personal profile. And so what's happened is, the Turo and all these other car share platforms have recently declined where they're not booking as much. And so a lot of people I've consulted have been in the situation where their personal credit has way too much debt and unfortunately have been defaulting on these auto loans. But I will say this, if you use the Carputty line of credit and had these cars on the Carputty line of credit, it's not going to be visible on your personal profile. So if you see things start to slow down, you could at least position your credit to where, let's say, okay, you might go out, get more loans, lines of credit, just as a buffer in case there's a downturn in your Turo business or hire car, whatever you decide to do. But again, what's happened is a lot of people got these credit union vehicle loans. I've seen people do 5, 10, do the double dipping at all these credit unions, go to 3 credit unions that use Experian, Equifax, and TransUnion and get, 9 auto loans. And then now they can't make the repayments and it's all on the personal. So Carputty basically accounts for that, where the debt is going to be hidden at least temporarily so that your personal credit profile is still intact and you can still maneuver, right? So that's just one thing, I would just keep in mind. Now, in terms of the keys to approval, number one, you want a bank account with deposit activity. So as I mentioned, they're using Plaid. So you do have to connect to Plaid. And what they're looking at is, do you have some type of money flowing into your bank account? Now, if you have a regular W-2 job, that's perfect. They're going to be able to pull that data in and see a history of money going into your account. Because at the end of the day, they want to make sure that you have enough income or revenue to cover the monthly loan payments, right? Another thing, let's say if you are self-employed, what I always recommend is that you get set up with a payroll provider. ADP is a great, payroll provider. And a lot of people ask me, how am I able to get a lot of approvals, whether that's on personal or business? Now, for the past several years, since I have an S corporation, which you're required to pay yourself a reasonable salary, I've been paying myself from my business to me personally, right? So I've been paying myself through my business using ADP. So what a lot of fintech companies are doing now, not only are they asking for pay stubs, but they're also doing electronic verification. Now, I've gone over this a couple times. And again, I'm not saying all this stuff just to, scare people, but there are a lot of these fintech service providers that are now doing instant income verification, right? And so they can even see what your last, paycheck looked like. I want to give you guys just a couple of companies that I'm privy to, just off the fact that I have a lot of relationships with different fintech companies, and they tell me, all these different platforms that they're using. The one that I would say you want to be aware of is called Pinwheel API. And there's another one as well, TrueWork, which we'll go over. But I just want to share this with you just to, give you guys some insight. So these fintech service providers get real-time customer income data. So pretty much what they do is they are aggregating payroll data. So let me zoom in a little bit so you could actually see this. Okay. So Pinwheel has what's called earning stream. So I'll read this here. So Pinwheel calculates accrued earnings by using real-time shift in pay stub data provided by a market-leading connectivity to 1,600 plus payroll platforms and 40 time and attendance platforms. So not only do they have, granular details into, the last time you were paid, but even real-time shift data to see, okay, how many hours have you worked in this current pay period? So like a lot of employers have these time and attendance where at the end of every day you enter in how many hours you worked. So now what they're doing is even forecasting your earnings. So let's say, you were sick a couple days and, your next paycheck might vary more than what you usually get paid. Now lenders are having insight into that so they could anticipate, okay, this next paycheck may not be as much as the previous paychecks because you haven't worked the same amount of hours, or maybe your hours got cut and, your next paycheck isn't going to be the same, right? This is just more, like I said, when it comes to this information age and insight. Now, another company that you want to be mindful of is called TrueWork. And, there's a very similar, I would say, to Pinwheel, but again, income and employment verification. So this is another similar company to Pinwheel, but they use these in mortgage decisioning. They do it with tenant screening. So if you're applying for an apartment, they could check and instantly verify your income. So in the future, it's not going to be, you just submit pay stubs or even stated income is going to go away, right? Because they're not even going to need to ask you what your income is, because they'll be able to verify it just in the same way that Plaid can verify your bank balances. These new platforms are going to be able to instantly verify your income. So as you can see right here, True Work Income, one platform for income verification, right? So again, they're pulling data from a lot of different data sources. As you can see right here, multiple verification methods. The reason why I'm sharing this with you is because I want you guys to be ahead of the curve when it comes to the lending space, right? A lot of the information about no docs and, finessing these banks and stuff like that, they're all going digital. So as it says right here, over 48 million active employee records returned in seconds, right? This allows applicants to share payroll data directly in your application. So guys, banks are rolling this out right now. So I just wanted to let you know the best way to get ahead of this is to actually start making sure that you have documented verifiable income, right? I know a lot of times, people don't want to, document their, financial information, but in the information age, your data is actually what's going to unlock a lot of opportunities. So any way that you could actually document, whether that's your personal income, your business income, you want to do it because that data is what will unlock a lot of financing opportunities. And let's say you have less than perfect credit, which I come across a lot of people who do, where you might have good W-2 income. You might have a good job. I come across people like this all the time who have good income, but maybe a couple things on their credit, they forgot to pay their bill. So now that late payment from 4 or 5 years ago that's reporting on your credit report is holding you back from qualifying based off of credit-based underwriting. So what you can leverage, if that is an issue, you could leverage your income, you could leverage your transactions. So I'm always telling people, business owners, get set up with payroll, pay yourself, document that. You also want to get QuickBooks if you have a business. A lot of banks are now doing QuickBooks integration. So now you don't have to upload a balance sheet or a profit and loss. They can pull your data automatically through that integration with your accounting system, like a QuickBooks or Xero. So they can pull all that information. And so now in the future, you're really not going to have to physically provide as much paperwork. Now, a lot of lenders will also use two different data points to verify the same information. So they might use Plaid, but then they also might ask you to download your bank statement. So I just wanted to share this with you just to let you know, just to get ahead of it, get your paperwork in order. I'm always stressing that. So just going back to Carputty, with Carputty, the main thing you want to keep in mind, you need at least a 680. They say a minimum of a 680 FICO. They're going to be using the mortgage score. So that's going to be your FICO 2. You can go on to My FICO and pull that information. Now, once you get approved, you're going to see the dashboard like this. And so what you can do before you add a car, you could actually pull the VIN and enter it. So you're going to enter the VIN and the mile. So you can go to any of these sites. Let's say, you can go to Car Gurus. There's also Carfax. You could pull history. So I just wanted to walk through this example. And again, I just pulled a random VIN. This is for a 2022 Genesis. So if you go back to Carputty, enter that VIN, it'll tell you what the current valuation is of that vehicle, right? All right, so this has 10,000 miles. Let's just say 10,400. So you add that, what they'll do is they're able to pull the information from the VIN. So right here, as you see, this just pulled up a 2022 Genesis. Again, I'm not adding this. I'm just, sharing an example. And it'll tell you what the value is. So the current value as of August 24, $44,611. So this is just more or less a guide to let you know, what the value of the vehicle is based off of the information they're able to pull from that. And, you could look at it over time, what the value will be, certain time, at certain date and times in the future. So again, guys, Carputty is a game changer. Just to sort of recap again, some of the key data points I just wanted to get across is that you could literally hide your trade lines, right? Because it's a hidden trade line. You can hide your auto debt. So if you don't want auto debt reporting on your credit report, you can use a Carputty line of credit. You can go a step further. You could finance it through a credit union or whatever institution, and then refinance it on Carputty so that you have a paid off auto vehicle trade line. So that in itself is a game changer. I would say this is similar to, for example, let's think of like Tally. So Tally was a personal line of credit where you could refinance or transfer your credit card balances. I would say this is pretty much a very similar model to that, but it's for auto vehicles. And I don't know if you guys heard the news, but Tally is no longer available, right? I guess the business model did not work. But for those who were utilizing it, it was actually a way to hide your personal credit card utilization. So you could pretty much do the exact same thing with auto vehicles using the Carputty line of credit. Again, 680 FICO 2. It's a soft pull. You have to connect through Plaid. Once you get your offer and you accept it, it will be a hard pull. So the thing I like about Carputty is that they tell you whether or not you're approved and what that limit is before you actually accept. And from my experience, what I got pre-approved for was actually what I received. So I just wanted to share this information with you. Another key point is you want to have some verifiable income because they will ask you to connect through Plaid. If anyone needs to get set up with a payroll so you can start paying yourself so you have verifiable proof of income, not only on your bank statements, but also electronic pay stubs, right? So a lot of times now banks are going to be using some of these third-party payroll aggregators that can instantly verify the last time you got paid through a payroll system. So that's very important. If anyone needs that, there's a link. I'll post a link where you can get set up with ADP, run payroll, and now you have verifiable proof of income, not just the paper stubs, but also electronically. So it checks out on both, routes. So anyways, that's all for today's video. Let me know your comments and questions right down in the description of the video, down in the comment section. That's all. Until next time, take it easy and we'll talk to you soon. Peace.